Hi everyone, welcome back to Level Up with Dawn. Today we're going to be doing what I think will be a quick video. It's just something that I had to learn the hard way, and I really hope that I can help you guys save money in the smallest ways when it comes to property investment. What I want to talk to you about today is homeowners insurance. Well, see, because it's like there's so many insurances that come with being a homeowner or a property owner. But let me describe to you first what I'm not talking about. So when you, let's say you buy a house, or maybe even if you're renting a property, and there's household contents that you want to insure, so in case someone robs you or anything like that, hopefully that never happens to you guys. um then your insurance company can help you replace those items, right? So that's home contents insurance. That's not what I'm talking about. And then when you own a home specifically and you want to actually insure the home that you're living in for if there's a fire, if your geyser bursts, or if it needs to be fixed in any sort of way, um, that like homeowners insurance, that's not what I'm talking about. Something similar, you would have that if you have a house, that's what you would have. If you have a flat, you probably already paying for something similar in your levies. So just keep that in mind. But what I want to talk to you guys about today is um insurance on your bond that you have on your properties, right? So if some of you have been through the process of buying property, you will know that some banks have it as a necessary requirement for you to have insurance on your bond. So that means if you are not working or if you pass away, then that insurance will take over and fully pay off your loan, or temporarily pay your installments until you are off disability or you are no longer sick and you can go back to work and then resume paying your bond payments. Okay, and that's important, that is needed, because you don't want, when you feel like your life is like going a bit downhill, you can't take care of yourself in the way that you need to, and then on top of that you're going to be losing your home because you can't afford to pay the bond that you normally would because you don't have access to money like you used to. But what I don't want is for people to be over insuring themselves when they don't need to. And I didn't realize that I was over insuring myself until I was in the market for life insurance. And then because of having life insurance, a lot of my other insurances became unnecessary essentially. So because you have a bond, you need to have that insurance, and a lot of banks require that from you. But if you have a home loan and if you have life insurance, then you do not need to have the bond insurance that the bank is telling you that you should have. And I mean, it's unfortunate for the banks, obviously, because that's an add-on product that they can have onto their loans so that um, holistically they can make sure that they are covered and that you are covered. But then if you have life insurance, please do not let anyone tell you that you need to get insurance over your bond. And it doesn't matter if it's your a home that you're living in. It doesn't matter if it's a property that you are renting out or that you are incorporating into your property investment business. If you have life insurance that is large enough, then you do not need to take on any more insurance when it comes to the repayment of your bond. And let me tell you why it's more beneficial this way. When you have a bond insurance, you pay a premium every month while you're paying off your loan, so that in case that you can't pay it off, they can cover you for that time being, or they can just fully pay off the loan, right? But then when you've fully paid off that bond, and in that period of you paying off that bond, you have never needed them to supplement your installments, that insurance falls away, right? Because the risk has fallen away. There's no longer a bond to insure. Um, but then you do not get your money back. Like that, it goes into the abyss. It goes into the profits of that company because you paid for insurance, but you never actually had to claim. And so they essentially they got free money from you. It just, yeah, it makes me so annoyed because I did this for 2 years. But anyway, so that's like the situation that some of you may be in right now. And then I was in a position when I got pregnant and I had my son that I wanted to get life insurance, right? And I knew that I needed a particular sum of money just because I knew in the case of my death, I know what kind of life I want to be able to provide for my son. So either I'm going to try and provide it for him while I'm alive, or I'm going to make sure that it's provided for him if I die. But then what life insurance is, and you guys have seen in my previous video about funeral cover versus life insurance, when it gets paid out, all your debts get settled, and then the balance of that gets given to your family to cover their living expenses like school fees and food and all of those, anything else that they may need to cover, right? So then, if I have life insurance that in my death will pay off my bonds, why do I need another bond insurance? The simple answer is I don't. So I have a life insurance where it's a it's life insurance, right, in the case of my death, but then it's also there's like dread disease and there's also disability. So it's like also in the cases where I temporarily can't work, I get a payout. So I'm covered. I'm fully covered in the same situations that that bond insurance would have wanted to cover me, um, so that I can be able to carry on paying this bond and it doesn't have to be seized and repossessed by the bank. And now the only obstacle then when it comes to taking on life insurance is making sure that your sum assured, which is essentially the full amount that they're promising to pay you in the case of your death, is higher than the bonds that you have. So if it's a case where you have life insurance for 1 million rand, but you have the home that you're living in, which is 500k, and then you have two investment properties which are each 500k. One of those investment properties would be able to be covered in your life insurance, but then the second investment property now, that takes the amount of your bonds to 1.5 million, but your life insurance is only 1 million. So then on that particular bond, you would need a bond insurance because you aren't fully covered in the case that you can't pay off that loan or in the case that you pass away. So if you're in that position and your life insurance doesn't cover all of your bonds, then maybe you would need to take on additional bond insurance. But, and this is not financial advice, it's a disclaimer that's in all of my videos. But practically speaking, right, and I'm talking to myself, okay? I'm not advising you in any way, shape, or form. But practically for myself, it makes more sense rather than having my life insurance and then um, covering those gaps with the bond insurance for specific bonds. I would rather increase my life insurance. Why? Because let's say I have life insurance of 2 million, right? And it covers my bonds, it covers my house, and then in the case where I'm living, I haven't passed away yet, and I've okay, let's do this mathematically, right? Let's say I have 2 million rand life insurance, and I have bonds that amount to 1.5 million, right? If I put, if I took a bond cover on those properties, when I finish paying off those bonds, that money goes into the abyss. I never see it again, right? But if I am paying for life insurance only, which is 2 million covered, 2 million of cover, and then I pay off my bonds, the money that I've been paying that indirectly covered those bonds hasn't gone into the abyss. My family is still gonna get that lump sum when I pass away. In fact, they're gonna get a bigger lump sum now because they don't have to minus 1.5 from the 2 million and then give them 500K. Now they're gonna get the full 2 million because I no longer have bonds. So having life insurance cover those risks of not being able to pay off your bond if you lose your job, if you get sick, if you pass away, that means that in any case, that money does not go to waste. Your family will get it. So I want you guys to think about this, okay? Um, Please just look into your bonds, look into your insurances, and see if you are over insuring yourself, because the nature of insurance is based off of fear, right? And some insurances capitalize off of your fear and off of the institution's fear. But then in the case when things go well, then there's still no benefit to you who has been paying, right? But in the case of life insurance, you still get the benefit of all these premiums you've been paying over the years, because it's under the house of life insurance, and it's not attached to a specific bond which has a finite period and it will end, and it can very much end before you even pass away. So I just wanted to come to you guys with this video because I've wasted money, okay, with bond cover. But I mean, granted, I didn't have life insurance at the time, but I think especially to young people who don't have life insurance yet, and you're trying to get your money up, you're trying to get your portfolio started, this is a good reason, if any, and you don't have any kids, you have no husband, no wife, no nothing, this is a good reason, if any, to start with life insurance. If you are building a property portfolio, this will ensure that you are using your money wisely and it's not going to waste depending on uncontrollable situations, because we couldn't control this pandemic that we're in. We can't control when we pass away. So at least make sure there's an upside to this risk that you're covering. But yeah, that's all I wanted to say today. I hope you enjoyed this video. If you did, please subscribe to the channel and give this video a like and share it wherever you think people would find value in this. And I will see you in my next one. Bye.